Hello, welcome to CMG Our Space Forex Lesson. This is week 7. Week 7 FX market forecast, especially for DXY. And then we might have time to look at gold, right? So welcome back once again. And then I hope you had a successful trading week. If not at all, I hope you didn't lose too much. So we didn't waste much time. We will look at last week's trade, what happened. And then we'll jump straight ahead into the pending week. So this will be week 7. So week 6, I remember in the analysis, the forecast, I said I was expecting DXY to be what? Bullish throughout the week, even though I gave that some clauses, some conditions, right? So my general overview was that DXY will be bullish. So let's look at what happened actually in the course of the week. So this is where we started the analysis. If you look at this particular candlestick, very thin, very small. Normally, when market opens in the new week, right, there's a jump. So that is what we see here, right? That's it. So the week actually began from here. So we said that market was going to be bullish. So in the first day of the week, that was Monday. Usually on Mondays, like I said, market does not move right away per the analysis. So many a time there's some kind of indecision. The market will be moving up and down until it actually what picks a direction that it wants to move, right? So that was what, in fact, otherwise happened. I think for a long time now, this is what I've experienced, right? So in fact, the recent week, market didn't find it difficult consolidating. There was just a small consolidation here, right? Just a small, around the midnight, right? I think Sunday before Monday opens. This is what happened, right? So there was a small consolidation, and then markets right away from the Thursday of the week, it zoomed. It was bullish. So I was even surprised as to how the market was moved. I was very, very surprised, even though I was not too much shocked. But you see, sometimes algorithms happen, right? The new year, yeah, it happens. So this is what this is what it did on Monday. Market just rallied, bullish for the first day of the week, right? So I was kind of confused, but then the market players, they have the power. So when it happened, and then from Tuesday, Monday, I think the evening entering to Tuesday, it started what? Reversing, right? Not reversing actually, it started pulling back. There's a difference between reversing, market reversing, and market pulling back. So if you could see, this is what I did, right? So I told you when I do the analysis for the week, I have a Telegram a page that I do I send some updates, right? Updates if what we said or anticipated in the week within the week, in fact the first day of the week, or during the analysis is going to happen as what we said. So I give update there. So sometimes if you are not on this page, the analysis that we do over the weekend may some kind of take time. It will take time to actually see what we anticipated. So I have a Telegram page. The channel, the link is in the description. Always check this so that you can be following what is going to happen. So I was updating people on the Telegram page that this is when they should pull out of the market, or this is when they have to enter the market, or this is when they have to wait. So those that were there, I hope they did that. So they won't incur much of a loss, right? just that they wouldn't be involved in too much of what trading. I know, in fact, for myself, the whole of this week, I think I traded like twice. Yes, I think twice. Yes, on Monday, I took my profits. On Monday, just from Sunday, Monday, I took my profit. So on Tuesday, when market started retracing, I went to the Telegram page and I told the people there that they either have to pull out or they have to check whatever is happening to their trades. So I said that if only they did that, I was giving the updates, live updates. So I did that. So when it got here, I realized the market was retracing. So most of my trades, I exited. I left the trades. Then I was waiting for the pullback. In fact, when the pullback started, I was expecting that the pullback will only pull up to this point and then go up. When it got there, it failed. My first analysis within the course of the week, in fact, it failed. So it got here and then it came back again. Started what selling. Then I had what the second what pullback point. It got here and then see what happened. I think it failed again, if not drastically or too badly. At least for me, it failed, even though it was just around the point. But because I wanted it to pull up, pull back here, pull up again here. So from there, I think from Wednesday, market started consolidating. So during this consolidation, I still had some limits and stops set, but I know where I put them. So during this consolidation, they were not triggered. You understand? Good. I said all analysis are not 100% what correct or sure. You do the analysis and you start monitoring until you find that edge, that confluence, then you enter. So I'll do the analysis, but I wouldn't enter right away. I'll wait for some confluence, some factors before I enter the market. So this is what happened. So from Tuesday, market started what pulling back, right? Pulling back or retracing. And then Wednesday, consolidation actually happened. So if you're not patient, I know for some, I'm in some group or some pages where some of them were still forcing the markets, you see, entering positions and all here and there. I was unperturbed. I didn't bother myself because I know where I put my limits, my entries. So the whole of Wednesday, I was not in the trade. Tuesday too, I exited my market on what? On Monday evening. So I was waiting for the pullback, right? So that was it. Then Thursday, I think there was some news. So my market, in fact, my position got triggered here for my sell order. Yeah, because I did this kind of boundary, consolidation boundary that when it breaks above it, then I'm expecting what DXY to actually confirm what we did over the what the forecast, right? So markets broke this boundary, this consolidation boundary, and then it started going up. Now, unluckily for me, I was not behind the PC. I was in town driving, doing other things. So, but when market started going up, I saw it. So I was happy. My positions have been triggered, and then I was in profit. Now, because I was not behind the PC, I think within some 3 hours or two, the market started reversing. So whatever profit I was in, it came back to what? A loss. Right? This is what happened to me. But if I was behind the PC, this wouldn't have happened. I would have exited because this candlestick forming gives me another perspective. Even if not for a long period of selling at all, I will leave the market with the small profit that I have had on that, and then look for another entry. So I was unlucky. I was not behind the PC because my account is a bit a lot. Yeah, I have plenty accounts. So if supposing it was one account or two, maybe I could have just exited on my phone. But because I have a number of accounts, more than three, I decided to let the market actually does its own thing. So by the time I realized, I came back around 7 p.m. Yes, when I came back, the market has actually done me bad. So I incurred some loss there. And then Friday, this is what a card, Canadian news, did to the market. So we didn't actually have a high impact news for USD, but because Canadian dollar was in play, in fact, had their news, it's actually influenced the market one way or the other. USD didn't have any high impact news. That's it. So I think we have seen the overview of last week's analysis. So I hope you didn't care much of what a loss. If not at all, maybe a break even would have had that. So that is so before we continue doing this analysis for the pending week, the 7th week, I would like to do some relating some markings so that we can have proper view of the charts. And this week's analysis will be brief. It will be brief. So let's start from, let's do a top-down analysis, right? From the weekly charts. So that is it. We are going to look at what is going to happen or what might happen if everything works as we would anticipate. So that is it. Now, this is the weekly, the 1 week time frame, right? Please watch carefully. I have some lines, resistance, and then the support lines. I don't clean them. For them, I might clean everything on my chart, but for them, I hardly clean them. Unless I see them happening at the same level, then I can delete some and then leave some, right? So this is a weekly analysis. Now, from around this point, like I said, in fact, I've already told you from the beginning, I think, of last series, telling you that for the next 2 months or so, I'm generally expecting bullish DXY, if not at all, to this level, which is 106.625. That's the level, right? But this is not going to be a linear sequence, a linear movement, right? Always, market does not move in a linear sense, in a straight line. There's up and down, but we are all looking at the general movement, right? So this is what we always do in this market, right? This is how market moves generally. So we have already seen this bearish fair value gap that the price will break above. Of course, that's what the price has done. I said it like two weeks ago that I'm expecting what DXY to break this fair value gap. It did that and then successfully broken this. Now we have another bullish candle, but in nature, it is what? Bullish. But in terms of anatomy, you might not understand this term. There's something we call anatomy, candlestick anatomy, right? It is fun in my beginner's class. If you look at that, you understand what I mean. I'm not going to stop using them. If they come up, I have to use it. It's a term, right? Unless you don't know your candlestick chart, you see the patterns. You have to understand this thing. So that is it. So in terms of what nature, it is bullish because it's green, or better say white on your what your chart, whatever color you have represented a bullish candlestick with, right? That is it. But in terms of anatomy, this looks what bearish to me. Why? Because there's a candlestick pattern called a gravestone or inverse what pin bar. We have a gravestone doji candlestick. And the doji candlestick, we have about 4 of them, right? And then one of them is what? The gravestone. When you see a gravestone at a resistance level, there's a higher possibility that the market is going to reverse. That is what it means in terms of anatomy, right? So what I see here, even though it is green or bullish in nature, it is bearish to me in terms of anatomy, right? That is one of them. That's one factor, means that it's bearish. Now, if you remember also, if you could remember, the last time, I think the last 2 weeks, I've been drawing a line, right? even though we are expecting or in an uptrend, right? Yet another perspective came up, which looks like something like this, right? Anytime I do this, at the end of the analysis, I think I delete it, but I'm going to draw it again to give you another perspective, right? So another confluence telling you that the weekly chart looks bearish, even though this candlestick is bullish. Now draw this trend line. This is a resistance trend line, right? So what it means is that at this point, price could what? Actually reverse, right? It comes from the top here, being rejected strongly here, then we are going back to this level. Now at this level, to me, this candlestick has the wick, 50% of the wick being cutting what? This resistance line, right? If you don't understand, in my intermediate level lessons, we saw something like this, right? So 50% of that wick being cut by a resistance line. If there is that's the EMA, the 50 EMA, right? That is it. So when it cuts around that side and it also intersects around the 50 EMA, then there's a higher possibility that the market is going to reverse, right? It's going to reverse. If it's a bullish one, it's going to reverse to be bearish. If it is a bearish one, it's going to reverse to be what? A bullish one. So this is what we saw. So if you look at now, this is the first time I'm taking time to do the weekly analysis, the weekly chart, 1 hour weekly. Normally, when you get there, within 2 to 3 minutes, you are done and you leave. But now look at it very well. So you see, I've given you two factors, which is actually what counterbanding what countermanding the bullish trend line that we see. Countermand, like it's going to fight against whatever first perspective that I saw or we have seen that is generally bullish. But I'm giving you another perspective, which is what? Contradicting. It's contradicting the bullish perspective that we have seen just a minute ago, right? Because now, if you draw your resistance trend line, it's what? That current candlestick is cutting it, 50% of it is cutting, and then the 50 EMA, I think I have it drawn on there. I don't know why it's not showing here. I restarted my PC. I think I was having some delays in my I think it was freezing. So I had to restart my PC. So now I'm not seeing the 50 EMA, but we'll see if I go to the lower time frame. So I'm sure it will be around that side. So if it happens there, then you see there are two different things that we are seeing at the same time. A bullish and a resistance what? At the bearish market that we are seeing at the same time. So now what we can draw, conclusion we can draw on the weekly chart is that there's indecision happening here. Indecision happening here. Market could bounce back and start buying, or it will reverse to some level before what buying, or it will even reverse and then not come back again. So that is it. Now, this does not change my general perspective for the coming month of price reaching this level. It doesn't change it because price will not move linearly. Because if you have seen so far, here price is moving linearly. No, the only bearish candlestick is this one, right? It's moving linearly. All greens, moving in that sense. It doesn't stop the fact that even though this market is going to be what bullish for the coming weeks, yet there could be a bearish candlestick forming, red candlestick forming here. Depends on the type of candlestick, the color that you have depicted for your what? Your bearish candlestick. So you see that is it. Now, let's move down to the daily time frame. Now, if you look at the daily time frame, let me get this thing off so that it doesn't confuse us. So that is it. Now, let me zoom in a bit. right? So now, that is what we are seeing here. Now, for the daily time frame, right, we see price reaching a particular zone we call supply zone, right? Even if I should take this one off, I can take this one off, this line, this resistance off, I'll leave it, right? Even I'll bring it back. They will all confirm one thing. This line and then the line that I just depicted, they are all depicting something. They tell me one thing. Now, here, generally, we are still seeing that the market is bullish, moving in an uptrend. This fair value gap has been broken successfully. So we are what? We are in a bullish trend now. Like I told you. I told you last week that the market is going to break this fair value gap. And when it breaks it, we are going to experience a bullish kind of market. Good. That is what is happening generally. So we have gotten to this level. Now, if you see here, this is a daily time frame. It looks as if what the market is trying to what reverse, because in fact the candlestick even forming here. If you are to regard these two lines as resistance lines, right? The candlestick forming here right now is what a morning star candlestick pattern. If you don't know a candlestick pattern, don't worry. Go to the intermediate class and watch this. This is what a morning star. Sorry, an evening star candlestick pattern. Evening star. So the evening star means that when they form at a resistance level, they have a higher potential of what? Reversing the market. That's what evening star does. It's a bearish candlestick pattern. So this is what we are seeing here. Good. That's one thing of a bearish potential. Now, it's also happening in the what? In the supply zone. Now, this may be like a contradiction here in the supply zone. So in the supply zone, meaning the market is going to what? We have it reversing. Sellers are what? In power. You understand? So one factor is that we are in what? A supply zone. Sellers has more opportunity, more edge in the market than the buyers, right? That is it. And then we are at a resistance level. Two of them, in fact, a resistance level. Even though we are generally in an upward trend, right? Now, the last 2 weeks prediction was that once we break this fair value gap, right? I hope market will be what? Bullish in that sense. So now there's another indecision here, because I told you in my previous analysis that when price gets around support level or resistance level, right? The main idea is that market is what? Has a higher potential of reversing. But don't forget that if we say higher potential, it doesn't mean 100% potential. Because when price happens or gets to these zones, they may either break it or be rejected. So it's a 50-50 chance, right? It's a 50-50 chance. Even though they are at that level, anything is bound to happen. Because it will depend on the market players, right? The counterpart market player. So that is what you have to look at. Now, I'm going to say this again, repeat that. My general perspective of the market being bullish has not changed. But before it actually buys or rallies, there may be some delays, right? Consolidation for a long time. Now, that's what we are seeing in the course of this year. We are seeing markets consolidating for long before a market moves. And then when they move, they don't move that massively. So that's what we are experiencing. You have to check the algorithm, what is happening in the market generally. So that is it. So my perspective for bullish markets for the coming month or the weeks has not changed. Yet you have to be what? Cautious. So whatever contradiction is sense I'm giving, it's not because I don't know what I'm saying, but I just want you to trade with precaution, right? Trade with proper risk management. So if you used to be too overzealous or too confident, then I'm telling you now that this is the time you have to slow down, right? You have to slow down a bit and check, else you might lose outrageously. before you see the market actually moving in the direction that you expect, you want it to move. So please watch out. So what I'm saying is these zones, when they are being rejected massively or they are overcome massively, then you can take your decision and then do that. So that is what I'm saying. Now let's move down to the 4-hour time frame. The 4-hour time frame, what is it? Right? 4-hour time frame. I'm going to clean out this trend line also. So here now, I see it to be in some kind of consolidation. At the same time, in a form of what? Retesting or pulling back. Sorry. Let me help you with the trend line or some market. Let's assume this is where we broke out of this zone, right? So we don't expect price to come down and, in fact, come down and just come down and bypass this particular zone. I don't expect that, right? So it's either it get to try to get to this level or to continue going up. It depends on what the week has for us. So let me help with some line here, right? This is a resistance line. So when it gets to a resistance line, bear in mind when markets get to a resistance line, we always say that when they get to the resistance line, we wait for the candlestick pattern forming to actually know that it's going to reverse massively or just going to pull back, right? Now, when they get to the resistance line, the normal reaction, most often than not, is for the market to react in a way of as if they are pulling back. Except it is only for news, massive news, in fact, high impact news. That's when they get to the resistance line, they have the potential of many a time have the potential of just breaking it outright. But if the market is moving in the normal sense, on the regular basis, they don't break resistance or support easily. If they have to break it, they will get to that level, pull back a bit, right? Get to that level, pull back a bit before going up. So using perma trading strategy, which is the next topic that I will treat, right? So watch out for that. Perma trading strategy or my trading style, when price get to this point, right? Many a time I exit, even though I'm a swinger, I exit and then look for another opportunity and enter again. The time that I don't exit is when maybe the news is massive and then it just passes or breaks that level outright. But then that one, then I think I'll count myself lucky because that is not my style. I'll count myself lucky and then the market, allow the market to do whatever it has to do. But when it gets to the level, it's either I exit the market or I know what to do with my positions. So bear in mind. So that's what I'm seeing. So that has gotten the reason I see it to go pulling back, right? Because pulling back and then maybe going up because here I don't expect price to get to maybe below this level, right? Let me just help you with another another line. Let me put it here, right? This is it. So I don't expect price to move below this. Now, if price moves below this, then my perspective for the week will change. Then now I will guess that maybe the market has changed. There's been a break of what structure, a change in structure, change in character. Then that is it. But if price does not break below this, then the buying bias or potential will still be what valid. So here, price may what gap up and then go in that sense. So even this candlestick, this you see the prices here. Price was rejected here. Again here, rejected here too, right? And then again rejected here, right? So let's see what the market has for us. So I don't expect price to break below this. If it breaks below these prices, then my confirmation or my confirmation bias will be very, very, very shaky. It will be very, very, very shaky. So when it gets here, and it doesn't pull back, then there has been a change in character or change in structure, and then market may try and do other thing else. But if they don't break this level and we are still here, then I will still hold it to be valid as a pullback time. So that is my perspective. Now let's move to the 1 hour time frame. That's I trade, right? So let's see. Right. So I'll still clean this up. This marking doesn't look presentable or valid on the 1 hour time frame for me. So I'll just delete it. I'm going to delete this one too. And then this one, then this one too. Right? So that is it. So if you look at this, 1 hour time frame, it still kind of look like a pullback. Because now look at this wait. Now look at this EMA. This EMA is what? 50. I use 50 EMA. So generally when price is above 50 EMA, then I'm expecting what? Price to be what? Bullish. When price is below the 50 EMA, I'm expecting price to be what? Bearish. That's I don't stress myself. Upon all my trading journey, the only indicator that I use so far, I've been using is what? The 50 EMA. I don't like to keep my chart clumsy, messy with other indicators. No, your adeptness or your skills is not based on the number of indicators that I use. Many people put a lot of indicators on their chart, which they don't even understand. Some of them don't even use it, but they just put it on it. Bear in mind, you are not in fact, you should be real to yourself. Who are you trying to please with fancy charts? No, fancy charts will not give you the money. Simplicity and consistency and good proper risk management. That is what will fetch you profit in this firm. That's it. So now back to the 1 hour time frame. Right, it's just below the 50 EMA. Right, and there's another resistance, in fact, support line, which doesn't look like a support if you have not been with me from the beginning of this series, right? It looks what? A support. So for me, it's the price is at the support line, right? And it's below the what? The 50 EMA. But it is just below it, just below the support line. In fact, at the support line and just below the 50 EMA. In fact, it has been price has been rejected a number of times. Rejected from this support line. Price got here down and then close just around it. You see, look at the candlestick for me here. Right? Doji for me here. Another, it looks like a doji, just a bullish one, a bearish, kind of a hammer, another kind of hammer, and then there's currently one forming. They are all around the 50 EMA and at the support level. They are being rejected a number of times, just around it. So anything can happen, even though from my general perspective of prices being below above the 50 EMA, they are just around it. So yes, there's anything is bound to happen, right? But I'm expecting a bullish week, let's say like 50%, right? It's kind of shaky because there's a lot of indecisions on all the time frames that we have looked at so far. We checked the 1 week, which looks indecisive, the daily bit of bullish, or I think, then the 4 hour indecisive, and then in fact the 1 hour to still indecisive because we are at some level where anything is bound to happen, right? Even though pricing has been rejected, price have been rejected a number of times at the support level, but yet we are looking at it. Because here, price looks as if what is still what a pullback, some kind of pullback, right? So let's see. To me, sorry. Let me delete this thing first. Right. Kind of right. See. So like a rate testing, right? A rate testing at the 50 EMA and also at the support line. So it looks like a pullback. So let's see what the week has for us. So my conclusion is that the market is going to be what? Indecisive for the coming week, even though I'm still expecting my market to be bullish, just that it's not 100% assurance, not with 100% assurance. But this is what is going to happen. So please trade with precaution, with proper risk management. Don't rush. Wait, if you still want to get my live update, please check in the description and follow us on what? On our Telegram page and other social media platforms, where I'll give you live updates every day. And then please like and subscribe to our page. Please share with your friends and family. And then there are some other links. Please watch, follow, and then act accordingly. Thank you very much for watching. I pray that you have a successful trading week. So see you in the next video. Bye for now.